Good afternoon, July 26, 2012. Not too terribly hot here in California. I know that it's hot in other parts of the country, but we seem to be doing okay here in the greater Los Angeles area. I hope you're having a good summer. I want to discuss something today which is very, very important and about which there is a lot of misunderstanding, and that is the phrase or the term charge-off. Now, let me tell you exactly what a charge-off is and why they have a thing called a charge-off. Banks and credit card companies and other types of lenders have a charge-off, and what a charge-off refers to is this is a bad debt, and we are now going to apply it to our annual books, our annual profit and loss, basically as an accounting function. That's what charge-off means, and the reason that banks are forced and credit card companies are forced to declare an account a charge-off is because bank regulators don't want banks holding on to bad debts and trying to show them on the books as good debts. I mean, that's basically the function of the charge-off. The function of the charge-off is to compel banks who have to basically show regulators their financial strength. It is to compel banks to show them what are the good debts on the books and what are the bad debts that they have to write off the books. It's an accounting function. When an account is charged off, it basically means that it is written off as a loss against the banks or against the credit card company's taxes. That's what it means. It does not mean that the debt is forgiven. It does not mean that for purposes of debt collection or credit reporting that the debt somehow is no longer valid and cannot be collected and cannot be credit reported. That is not what charge-off means. Charge-off is an accounting function for a bad debt to basically make banks and credit card companies take the bad debts off their books so that their books only reflect the good debts. Now, when does a charge-off happen? A charge-off happens, basically it happens 6 months after the date of first delinquency, providing that the account is not thereafter brought current. So if a consumer goes delinquent on January 1st of 2012, then on July 1st of 2012, if they've made no efforts to get the account current again, then the account would be charged off. Now, what happens with charge-off accounts? Generally, charge-off accounts, some banks and some credit card companies will try themselves to try to collect on the charge-off. This is actually, in my opinion, it's more rare. Most banks or credit card companies collecting on their own debts are collecting on debts that are not yet charged off. Normally, what happens to charged-off debts is they're sent out to debt collectors. They're sold, they're assigned, whatever. They're assigned out to debt collectors for purposes of collection. If you get contacted by a debt collector on a charged-off debt, or if you get credit reported on a charged-off debt, the mere fact that it's charged off is not a defense to you not owing that debt. It's not a defense. If you owe the debt, the fact that it's been charged off is not going to help you as any kind of defense for that particular debt. That debt is still a valid debt, and the debt collector is still allowed to try to collect it from you, and is still allowed to credit report you. So this is just a brief little video, but I wanted to make sure that you understand what charge-off is and what charge-off means. We get a whole lot of consumers that call us all the time, and some debt collectors trying to collect a charged-off debt from them. And we have to explain to them that they're allowed to collect a charged-off debt. Of course, if it's a very old charged-off debt, then there would be other issues like the statute of limitations. I mean, in California, if the date of delinquency is more than 4 years ago, and if it's been charged off more than 4 years ago, more than 3.5 or 4 years ago, then there would be an issue on the statute of limitations, whether the debt is still valid because the credit card company or the debt collector waited so long to try to collect on it that it's no longer valid to try to collect on it. That's a statute of limitations, and that's something that's entirely different from charge-off. For a debt that is in charge-off status, a debt collector is still allowed to collect on it, and the original creditor or a debt collector is still allowed to credit report it. So anyway, I hope that clarifies what a charge-off is, and please call if you have any questions. Thanks very much.